Yes, we have our second look at third quarter GDP. Our last look was up 2.6. Boy, we zoomed up to 2.9%, added 0.3, very unusual, up 2.9. On the consumption side, we improved by 0.3 from 1.4 up to 1.7. On the pricing index, 4.3 versus 4.1, and 4.3 is very interesting on the price index because the high watermark there goes all the way back to 9% in June of 22. We have made great strides there. And if we look at the core personal consumption expenditure, quarter over quarter, that's up 4.6. The high watermark there was 6%, and that was in June of 2021. That was the highest level since 1983. And by the way, on the pricing index, that up 9% in June was the highest since 81. So we have made strides there, but I do want to point out that 4.6 is sequentially higher than the 4.5, our last look, and that is something to point out. On the advanced trade balance, which of course is a deficit, we're at $99 billion. Wholesale inventories up 0.8. We're expecting up 0.5. And retail inventories, they were down 0.2%, down 0.2. In this case, that's probably not a bad thing. If we summarize, we've seen yields creep up just a little bit. 10-year are near unchanged, right around 3.74%. Obviously, everybody continues to pay attention to China, and even though the news seems to be improving a bit, there's a lot of effects of what's been going on, whether it's the demonstrations, the hard COVID policies, their service PMIs, 46.7, their composite of 47.1 in China. These are super, super weak numbers, and they're on pace for their lowest GDP in 4 decades. These are things to pay attention to. Becky, back to you.
Rick, stay with us. We're going to want more of your input in just a moment, but let's check in with Steve Leisman as well. Steve, what do you think of these latest numbers on top of the ADP?
Yeah, I mean, it's again, this was the, at least this quarter or even even late last quarter was the one where we're supposed to be slipping into recession. Instead, in the second half of this year, the economy has rebounded from those 2 negative numbers we got in the first half, which, again, were not essentially the core of the economy. They were not consumer spending and business spending. These revisions on 2.9 came because, and Rick was right to be surprised, you had upward revisions to business spending and to consumer spending. Those were the keys right there. And remember, this is real GDP, so this is after we get done taking account for the 4% inflation that Rick reported. So nominal GDP obviously is going to be 6.9 or up near 7%. So we took care of inflation and we spent 2.9% or had 2.9% more additional activity at an annualized rate. So I'm interested to see what happens to the outlook for the fourth quarter. But as you recall, Becky, we were tracking in the CNBC Rapid Update about a 2% growth rate in the fourth quarter because of those strong retail sales numbers we had for October, to see those continue in November. But the Atlanta GDP now was up north of 4%. So when I think about what challenges Powell has today, what challenges the Fed has, this economy that is still at potential or in some cases a little bit above potential, I think that's one of the challenges for a Fed that wants to create slack in the economy.